Many long-term dividend growth investors seek the perfect investment vehicle that offers not only a consistent stream of dividend income, but also long-term capital appreciation. However, there is one simple yet important metric that many long-term dividend growth investors either don't think too much about or overlook for whatever reason. This commonly overlooked metric is the dividend growth rate. In this video, we will dig deep into what dividend growth rate really means and why the SCHD ETF's dividend growth rate is something that every long-term dividend investor needs to fully understand. Also, make sure you stay tuned until the end of this video because we are going to see what SCHD's future dividend, all the way out until 2030, could be. The dividend growth rate is the annualized percentage rate of growth that a particular stock's dividend undergoes over a period of time. It is calculated by dividing the difference between the new and old dividend by the old dividend, and multiplying by 100. Knowing the dividend growth rate is a key input for stock valuation models, known as dividend discount models. Let's discuss a little bit more about the SCHD ETF and what it even is. The abbreviation SCHD refers to the Schwab US Dividend Equity ETF, and it's an exchange-traded fund ETF. Issued by Charles Schwab, which is a corporation that provides financial services. The performance of the Dow Jones US Dividend 100 Index is intended to be replicated by the SCHD ETF. It includes 100 high-quality U.S. companies that have a history of consistently paying dividends and also raising dividends at a very fast rate. Now, the companies within SCHD are chosen based on things like dividend growth history, dividend yield, and overall financial stability. When you invest in SCHD, you're essentially buying shares of an ETF, which represents a diversified portfolio of all these 100 dividend-paying companies. Now, SCHD is currently up around 179+% on the max chart, offers a 0.6% expense ratio, pays a quarterly dividend, and has over $47 billion in assets under management. Before we look further into SCHD's dividend growth rate, and before we see how much SCHD's dividend is going to grow over the next several years, let's talk a little bit about what dividend growth rate is and how it works. So, dividend growth rate is a measure that indicates the annual rate at which a company's dividend payments have increased over a specific period of time. It represents the compounded annual growth rate, CAGR, of dividends over that period, and the dividend growth rate is often expressed as a percentage. Now, if you were to calculate the dividend growth rate, you would typically take the difference between the final dividend payment and the initial dividend payment, divided by the initial dividend payment, and then divide that result by the number of years in the period. Finally, the result is expressed as a percentage. So, a real quick example of this would be, let's say a company paid a dividend of $2 per share in the first year, and then increased it to $2.50 per share in the fifth year. The dividend growth rate over a 5-year period would be calculated as follows. It would be the final dividend minus the initial dividend divided by the initial dividend divided by the initial dividend, divided by the number of years, which would give us in that circumstance a 5% dividend growth rate. Now, dividend growth is especially important for investors that might not have all that much money, all that much capital to invest into an ETF like this. This is simply because, in theory, what this means is that if an investor were to invest into something like SCHD today, which is paying out a current dividend of around $2.80 or so, as of 2023, if SCHD ETF's dividend growth rate continues like it has in the past, that investor will be getting paid more and more money for every single share of SCHD that they own. Now, this means that the only thing the investor would have to do, in theory, to get paid more and more in the future is to hold on to the shares of SCHD long-term and allow the dividend growth rate to really kick in. One of the ways that I like to compare dividend growth to is considering dividend growth like a job. Every few years, you might get a raise, Some years you might get a bigger raise. Some years you might get a little bit smaller raise. But the longer you stay at the job, in theory, the more raises and the more money you should earn in the future. And what's cool about investing, especially into a fund like SCHD, is that once you're invested into the ETF, there's no work. It's not like a job where you have to go there, clock in. You just buy into the fund, and at least historically speaking, it pays you more and more year after year. But I know exactly what you guys are still wondering. What is SCHD's dividend going to look like long into the future if we were to extrapolate and use the dividend growth rate metric? How much would a shareholder of SCHD be getting paid? Well, SCHD currently has a dividend growth rate on the 3-year time frame of 14.5%, which is extremely high. SCHD currently has a dividend growth rate on the 5-year time frame of 12.24%, which is still remarkable. And on the 10-year time frame, SCHD currently has an 11.35% dividend growth rate. Another entertaining method to examine the performance of SCHD ETF's dividends over time is to zoom out somewhat all the way to 2011 and 2012 and look at the big picture. What's crazy is that SCHD didn't even pay $1 per share until the year 2014, when the yearly dividend was $1.04. However, if you scroll all the way up until the current day in 2023, SCHD is supposed to be paying around 2.81 cents or so. And what's super interesting is that if we were to assume an annual dividend growth rate for SCHD of 10, if we use a dividend growth rate of 10.3%, we can see that in 2024, investors could assume, once again, merely based on an assessment, that SCHD could pay dividends totaling $3.10 in that year. SCHD could pay 3.41 in 2025, and the ETF could pay 3.75 per share in 2026, 4.13 in 2027, and 4.55 in 2027, and 4.55 in 2020. What's pretty cool about this is that the power of compounding really kicks in, which means that as the numbers get bigger, they get bigger and bigger faster and faster. In theory, this fund could pay $5 per share per year in dividends by 2029, and SCHD could pay even more in the years beyond. Look at what it's paying now. It's paying 80 cents per share and 90 cents per share, and the current day it's almost triple that. The morale of the story is that even though a fund like SCHD, VYM, or some of these other really high-quality long-term dividend growth ETFs are offering a relatively smaller dividend yield compared to the dividend yield you could find in some higher-yielding options out there. The dividend growth rate is a very important metric. If you found this video entertaining, please show your appreciation by giving it a thumbs up and subscribing to receive similar videos in the future. I want to express my gratitude for your visit and say that I look forward to seeing you in the next video.